Hello traders, this is video number 9 and in this video I'll teach you a reversal trading strategy which you can use in 1 minute or in 5-minute expire. The last video I have taught you 4 important concepts. The first concept was how to spot a trend, how to spot a uptrend and how you can spot a downtrend. Secondly, I taught you about buying and selling zone. So this is buying zone. This is and these are selling zone. Buying zone are nothing but support level or you can say demand zone. So this is a demand zone or any demand zone or any support level is a buying zone. But you have to focus on the extreme ones and those who are the strongest. We are going to use the strongest level only which are clearly visible through naked eyes. You don't have to draw them. So if you have strong support zone, then you will say that this is a strong buying zone. And similarly in a downtrend, you can see this is a strong resistance as it is clearly visible. This is lower high swing and this is also a lower high swing. You can see here. So this is also a selling zone. In a downtrend, we also have buying zone, like this is our buying zone. But as I told you that we always try to follow the trend. So when you are taking trades in the direction of the trend, you have to follow your buying and selling zone accordingly. Suppose if you are trading in an uptrend, you have an uptrend market. You have an uptrend market where price is breaking upside by creating break of structure. So what you will do, you will try to find position in which you can use buying zone from the bottom and can take a reversal trade because you wanted to take trades in the direction of the trend. Similarly, when the price is in a downtrend, these are your selling zone. What do you want? If you are having a downtrend market, you will try to take trades in the direction of the trend. In a downtrend, you will follow a selling zone and then you will take a reversal trade in the direction of the trend. So first thing I taught you to how to spot a trend. So it's easy when price is creating higher highs, higher lows, higher highs, higher lows, higher highs and higher lows, and it is breaking above all the time. It is creating break of structure in the upward direction. This is an uptrend market. And similarly, when price is breaking in the downward direction, giving you a break of structure in the downward direction by creating lower low, then you will say this is a downtrend market. So we will always try to follow the trend. Second thing, you will use a buying zone when trading in an uptrend so that your trade is placed in the direction of the trend, because a buying zone in an uptrend will give you better results than using a selling zone from the above and going for a reversal trade, because going against the trend decreases your chances of winning. So whenever you are trading with the trend, this will give you a better trading result. So in an uptrend, you will use buying zone, which means you will use support levels, or you can say a demand zone. Similarly, when you are trading in a downtrend, you will use selling zone to place reversal trade in the direction of the trend when the price gave you rejection from the selling zone. These selling zones are nothing but resistance level, or you can say supply zone. And always use strong buying selling zone, and to find strong buying and selling zone, you just have to see if these levels are clearly visible on the chart or not. You don't have to work hard to find these levels. These levels are clearly visible and you don't have to draw them. Without even drawing them, you know that these levels are strong because they are clearly visible. So these are the two things. Now the third thing which I taught you was that if you are watching an uptrend and you wanted to take a reversal trade, you can't take a reversal trade from a buying zone if the price is falling sharply. If the retracement phase is sharp, you will always wait, because in this case you can have a breakout in the downward direction. So the price action needs to be weaker. If the price action is strong and it's moving very aggressively, do not go for a reversal trade in this situation. And what you need weak price action. Market failing to break this support zone or a buying zone, then only you can expect a reversal. You need weak price action to get a reversal. Only if the price is moving aggressively, you will not take a reversal trade. And let me explain you with a simple example. Suppose if a car is moving at a very high speed towards a wall, what do you think will happen? There are chances that the car will going to broke this wall and then it will cross. And same thing happens when price moves very aggressively. In most cases, you will find market breaking these support zone or buying zone. That's why we need slow moving car so that we can absorb the impact and can take reversal. So the third thing is to wait for the price action to get weaker. If the price action is strong, you will not take reversal trade. Similarly, in a downtrend market, what you need a selling zone. And if the price is moving aggressively towards it, you will not take a reversal trade in this case. What you will do, you will simply skip this. What you need weak price action like this so that the sellers can reverse the price action in the downward direction. So you need weak price action. And the last thing which I taught you is once the price reach this selling zone, when the price action is weak, you will look for reversal candlestick pattern here. And once you have a reversal candlestick pattern, you can go for a trade here. So let me summarize this strategy for you. Suppose the price is moving in the upside direction. It's creating higher highs, then higher lows, higher highs, and the price is here. And you know that as the trend is uptrend, you wanted to place your trade in the upside direction. So what you will do, you wanted to take a reversal, you will wait for the price to go down. If the price starts going down, this is the retracement phase. You will try to find strong buying zone inside this zone, and they may be here, they can be here or here. It doesn't matter. What you need is a strong buying zone. Once you have a strong buying zone, suppose this is your strong buying zone, you will then wait for the price actions to get weaker. And once it reach the zone, then you will wait for a clear candlestick confirmation. You need weak price action. If the price action is like this, do not trade reversal. You need weakness in the market, some green candles, some red candles, some green candle, and that is how, if the price is moving towards the zone, then only you can expect a reversal. And if the price is at a buying zone, the price action is weak, what you are looking for? You are looking for a reversal candlestick pattern here. So if you have a reversal candlestick pattern, you can go for a 1 minute reversal trade or a 5 minute reversal trade. It is totally your choice. The only thing which you have to remember in this strategy is very, very simple. This is your reversal candlestick pattern. All you have to focus is if there is any recent level present, if there is any recent level above this candlestick confirmation, then you will not take the trade. Which means if you have any resistance or a small selling zone where previously price shows a rejection like this, then you will not place your trade because it can reverse the market again. So let me make it very clear for you again. So you have this strong buying zone, you have uptrend, you wanted to take a reversal, the price action is getting weaker, and suppose the price action is like this and suddenly it hit that zone, and now you have a strong engulfing pattern like this. In this case, you will go for a call for 5 minute or for 1 minute expiry. It is totally up to you. But if this candle closes like this and also have some rejection like this, a small wick, I'm just drawing it so that you guys don't get confused. A wick is not necessary, but I'm just drawing it so that you understand that there is some resistance present where previously market reverses and the same candle is having rejection from the same level, or if this candle failed to even reach the same level, suppose this is your candle and there is no wick and you have a resistance level, a recent resistance level here where price previously got rejected back and then it goes down like this, and you now have this candlestick confirmation. In this case, you will not take a 1 minute trade in the upside direction or a 5 minute trade. Why? Because this resistance level is nothing but a change of character. In this case, you need some change of character. That's why you need complete break. So if you have a candlestick pattern like this, you can go for a trade. If you have a candlestick pattern like this or like this, so in this case you will not take trade because there is resistance above. In this case you will not take trade because there is a resistance and the price got rejected back and it closes just below the resistance level. So all I'm saying is, if you have any hindrance, if you have anything that is stopping the market from going up, then you will not take the trade. These levels, these above levels are not important. The recent level I'm talking about, which means the last recent swing high in this case, which is this level. So if the price got rejected back from this zone, you will not take the trade even if you have a confirmation candle like this. If it closes below, you will not place the trade. Okay. So similarly, if you are trading in a downtrend, suppose this is your downtrend. And now as the trend is downtrend, you are thinking that I will take a reversal trade from this particular zone when the price started retracing back. So what you do, you just find some selling zone, which is here, a strong selling zone. So now you are waiting for the price to go up slowly, not aggressively. If the price is going aggressive, you will not take the trade, and it goes like this. It hit this zone. Now you have a strong candlestick confirmation, and then you can go for a trade. But in this case, as you can see, I draw it knowingly because there is a resistance level recent, and in this case you will not place the trade. All you need is a complete candle which shows aggressive selling, total dominance, and a break from the recent swing low. So in an uptrend, when the price goes like this, you want break from the recent swing high. In this case, you want recent swing low broken. This is ensuring you a change of character, which means that the major trend is downtrend, but as this smaller trend is uptrend, we need change of character at least to make sure that now the trend is changing. In this case, you don't need any break of structure as the major trend is downtrend and you are trading in the direction of the trend. So all you need is a change of character. So you will always wait for the candle to give you a clear break from the recent swing high or swing low. So all you are looking for here is a strong candlestick confirmation, and then you are good to go for a 1 minute or 5 minute trading. But the recent low needs to be broken completely, and you have to see if any recent level is stopping this particular candle. If there is any recent level, then you will not take the trade. I will give you so many examples so that you guys can understand how you can take trades and how you cannot. The only thing in this strategy which you have to focus on is a break from the recent swing low or recent swing high in an uptrend. So this is about the trade in the direction of the trend. Now let's understand about the trade in when you are going against the trend. So this is exactly the same, and you have, suppose this is your selling zone, The trend is uptrend. This is your selling zone, and this is where you will look for a reversal candlestick pattern. But you have to wait for the price actions to get weaker. If the price action is like this and it is hitting a resistance or a selling zone, you will not take the trade. What you need in this case, first of all, you will see if you have any strong selling zone. This is your selling zone. The trend is uptrend. You are looking for a reversal from this resistance zone. So what you need? You need weakness in the uptrend like this, and you can see like this, and after that you will have a candlestick confirmation like this. Then you can go for a trade. If suppose you have this move and here you got a reversal candlestick confirmation, but it does not broke this recent swing low, you will not take the trade because right now the price action is still of an uptrend. So you just have to wait for the price actions to get weaker, a weak price action where you can expect a reversal, and then a good strong candlestick confirmation in your favor to place your trade. Now the only thing which you have to understand is how to find and what are the reversal candlestick pattern that you can use. So let me show you the reversal candlestick pattern now. So if you are trading in an uptrend, you have to use bullish reversal pattern if you want to take your trade at the support level for the reversal in the direction of the trend. So the reversal patterns are like this. First of all, a bullish engulfing pattern you can see here. This is what you are looking for. And the second is bullish inside bar formation. You see here. Now in this case, you can look, you can see that this is the recent resistance which is broken here. So this is your confirmation. The third is dozy candle, that is morning star. A pattern like this you can use to take a reversal trade, and you are looking for a pattern here at the buying zone, patterns like this, or a bullish pin bar pattern. Similarly, for a downtrend, you will use these bearish reversal pattern. First, bearish engulfing candle like this, a strong confirmation, inside bar formation, dozy candle, or bearish pin bar. You will use these pattern when the price is moving in a downtrend and you are looking to take a trade from a selling zone in the direction of the trend. That is where you are looking for these kinds of reversal pattern. And similarly, if the price is going up like this and you are looking for a reversal trade from this zone, you will wait for the price action to get weaker. Once it reaches this zone, you will then look for bearish reversal pattern, because right now we are looking for a reversal in the downward direction. So when you want to take a trade against the trend, when the trend is uptrend, you will use these bearish reversal pattern, bearish engulfing, inside bar, dozy, and pin bar. Similarly, when the trend is downtrend like this and you wanted to take a reversal trade from this zone, you will look for price action that is weaker, which means a price action like this, and here you will look for a candlestick pattern, a bullish candlestick pattern, because you want the price to go up. So you will look for bullish reversal pattern like bullish engulfing, inside bar, dozy, and pin bar. And that is how you can trade with this strategy. So let me summarize it one more time for you. Simple. So in an uptrend, this is your uptrend market. You wanted to take your trade in the direction of the trend. You just draw your strong buying zone. You then will wait for the price to go down weak as a weak market. Once it reach this zone, you will then look for a strong candlestick confirmation which breaks the recent resistance, which in this case is here, as you can see. Once it's broke, you can go for a trade for 1 minute or 5 minutes. If the candlestick is like Suppose if the price moves like this and you have a strong candlestick confirmation like this, you will not place your trade. Why? Because this candle failed to break the recent resistance which reverses the market. The recent one is the most important. I'm telling you again and again, the recent one which are looking strong, which have reversed the market previously and is stopping the market from going up. You need clear break from this. So what you are looking for in this case, a pattern like this. So once you have a pattern, you can go for a trade in the upside direction for 1 minute expiry or for 5 minute expiry. Similarly, you will do the same when the trend is downtrend. In this case, you will look for a selling zone. Then you will wait for the price to go weaker and reach this level. Once it reaches this level, you will look for a strong bearish reversal pattern. A pin bar pattern can work. A dozy pattern, an engulfing pattern on an inside bar pattern can work here. All you are looking for is a reversal pattern. Once you have a reversal pattern that breaks the recent support here, you will take the trade. When you are going against the trend, suppose like this, you have your strong resistance here. You will then not take a trade if the price goes straight strongly to this zone. You want weakness like this. Once the price reaches this zone, you will look for clear candlestick confirmation which broke the recent support level. And this is your bearish reversal confirmation. Once you have, you can go for a trade. Similarly, if you want to take a trade against the trend, you are looking for a strong buying zone. You will wait for the price to get weaker. Once the price gets weaker, you will look for a reversal pattern like this and can trade also. In this reversal pattern, you can also look for one or more condition, which is if the price action is going like this, suppose, and you have this strong zone. Now the price goes straight to this zone, but here you find that price is now getting weaker and it's moving like this, and suddenly you have a reversal pattern here which breaks the recent support. You can go for a trade in the downward direction here also. So all in all, you need weakness in the chart, and the weakness can be in different form. Like if the price moves like this and then it consolidate, this is also a weakness. You can go for a reversal. If the price action goes like this and then it get weaker and weaker, you can look for a reversal here also. So all in all, you are looking for the momentum to get weaker. If the price is moving very strongly like this, there is no chance you can take a reversal trade and can win all the time successfully. But I just want to tell you one thing. If you want to go against the trend, it is your choice, but I will advise you not to go against the trend at all, because going against the trend will make you lose more. So if you want to use a reversal strategy, use it in a way in which you are going with the trend. Like taking a reversal trade from the buying zone when the price is in an uptrend is a good idea, rather than taking a reversal trade from the above when the price is going in an upside direction strongly. All in all, I'm saying if you want to take a reversal trade, use it in such a way that you are following the trend rather than going against it. So I think I have explained you the setup. In the next video, I will share all the example that I have when I take reversal trade, so that you guys know how you can trade with the strategy. That is it for video number 9. We'll see you in the next video very, very soon.